we're going into a recession. The Fed has gone on the warpath of raising rates very fast. And it looks like later this summer, we could be in some very serious economic problems, recessionary problems.
In today's video, Mark Moss, host of The Mark Moss Show, discusses his claim that this banking crisis is only in the first inning. He claims that he uncovered something much bigger and deeper than most people realized and could crash the entire system.
Is Fidelity maybe the next major player in terms of Bitcoin onboarding and adoption? What are your thoughts?
Yeah, so there's a couple ways to think through this. So first, I would say, yes, Fidelity is the major player. They are a major player. They have, 83 million accounts, almost $10 trillion in assets. So yes, they are the major player, period, right? They're one of the biggest institutions. But they've also, to the clip showed, right, they've been in Bitcoin since 2015. They've been in this with their Fidelity Digital for a long time. They were doing Bitcoin mining. So not only are they one of the biggest financial institutions, they've also been in Bitcoin and having this digital strategy for a long time. So yes, they are the major player. Now, two things I would answer to that question. So first of all, you asked, will other institutions be willing to use them without regulations? So I'm going to answer this in two ways. So first thing I'm going to say is that I believe the regulations are very clear. I believe there's massive amount of regulations. As a matter of fact, Bitcoin is one of the most regulated assets in the world. So it has the IRS has already said what Bitcoin is, the CFTC, the SEC, FinCEN. I mean, every organization has already said what Bitcoin is. So I think it's one of the most regulated assets. Sure, there's a lot of uncertainty with crypto, but Gary Gensler, head of the SEC, has reiterated multiple times that he believes it to be a commodity, Bitcoin only. And the previous head of the SEC, Jay Clayton, also said the same thing. So we've had two heads of the SEC be very clear on this, and multiple times be very clear. So I think it's already clear. Like I said, everyone's already chimed in. Both heads of the SEC have said that. So I think the regulation is clear. Now, to the second question, part of the question, which was, will institutions be willing to use this? We answered the regulatory part, but let's just talk about the other part of the question. So in order, if you look at any new technology, there's what's known as the diffusion of innovation. And it's like this bell curve. And so you have the innovators, then you have the true believers, the early minority, and then there's a chasm. Then you have the early majority, and then you have late majority. Right. So what happens is the first two pieces make up about a 15% adoption. Then there's a chasm. And the reason why I'm saying this is because, all over the place, you saw blockchain. Today, now everything's AI, right? So this software is with AI. Before it was this software with blockchain. I don't care. Well, the average person doesn't care about blockchain, nor do they care about AI. I have a problem. I want a solution. Does your solution fix it? I don't care. Was it written in JavaScript or Python? I don't care about that. And so I don't care if it uses blockchain or AI. And so back to answer your question, will these institutions use it? Certainly they will. The reason why is because it's going to solve their problem better than any other application could. So using Bitcoin Rails and using Lightning, to the point of that conference you're talking about, they're going to be able to transfer assets faster and cheaper than any other method that they can choose. And so they're going to use it because it's far superior, not because it's blockchain, Bitcoin, crypto, whatever.
Yeah. They're saying it's the biggest asset class right now within Fidelity. What are your thoughts?
Yeah, so there's a couple things that I think about there. So first of all, I mentioned this diffusion of innovation, this bell curve, right? And so there's that chasm. And so in order to get over that chasm, the reason why the chasm is there is something has to change in people's minds to bring the early majority in. And what is that? Well, it's typically when it goes from having to understand what a miner is and what UTXO transactions are. It's when you go from that to just like, oh, this is a good asset to own, or it's a good way to transfer money. You don't have to explain to a kid how an iPhone works. They just know it works. And so when you see Fidelity getting into the game, that's what pushes it over the chasm. And yes, that brings in the majority. And so yes, it's certainly a watershed moment. And because it legitimizes it, it makes it easier. And he made that point clear, that, a lot of people wouldn't do it. But now that I have a trusted party like Fidelity, I have my money already there, and it can just be in my account as one other security or commodity or asset that I have. And so it really bridges that. So yes. As to the second part of the question, could it withstand the economic turmoil that we're in? And I would say, yes, certainly it can. But I think the question I would always ask is over what time frame? And so what do I mean by that? We're already starting to see Bloomberg Intelligence put out a piece of data last year saying that they thought by the end of last year, so whatever, 5-6 months ago at this point, that Bitcoin would have moved into a risk-off asset. And I believe we're already seeing that. Certainly in other countries we are. So if you're in Argentina, if you're in Turkey, Venezuela, Lebanon, et cetera, it's a risk-off asset. So you're trying to get out of your currency as fast as you can. In the United States, inflation maybe tamed down a little bit. Maybe it's not as urgent, but I think we are starting to see that transition. And so as we're witnessing banks collapse, Bitcoin's going through the roof. As we're witnessing a debt ceiling debate rage, Bitcoin's going through the roof. As what we're really witnessing is a sovereign debt crisis. That's what we're really witnessing. It's happening all across the globe, not just the United States. And we're going to see Bitcoin go up. Now, all of that continues to highlight the fact that currencies are dying, banks are collapsing, and we need something like Bitcoin. We also have the rise of authoritarianism, which is also highlighted in the reason why we need Bitcoin. So all of those are super bullish tailwinds, if you will. Now, we're going into a recession. The Fed has gone on the warpath of raising rates very fast. And it looks like later this summer, we could be in some very serious economic problems, recessionary problems. In that environment, is that enough? Is all these tailwinds enough to keep Bitcoin going up as everything drops? Well, one, I would say it depends on how big it drops. And I would say probably not. I'd say probably not. And the reason why is when we have a crash, 2020, March 2020, or we go back to 2008, even risk-off assets like gold also sell off. But I want to make things very clear for people, because what happens is when you measure things in US dollars, you're getting a very manipulated viewpoint, a very manipulated measuring stick. And this is a key piece for everyone to understand. We don't want money. This is contrary to what most people think. We don't want money. What we want is goods and services. The money gets us those goods and services. And so what we do is we use money to store our value until we're ready to get the goods and services we want. And so this is why it's a key piece. The money gets us the goods and services. It's the purchasing power of the money. And so the reason why it's a key piece is, let's say in 2008, the stock market dropped about 60%. Gold also sold off by about 25%. But I think gold hit about 680, but gold bought more at 680 than it had bought at 1,000. So even in US dollar terms, gold went down. It actually got you more purchasing power, which is what we really want. And so that's why it's important. And also the other thing is, it's not what happens in that short downturn like March 2020, Bitcoin sold off as well. Gold also sold off as well. It's what happens after. And so what we saw, there was a sharp downturn with a V recovery. Bitcoin blasted to the moon, as did gold as well. So what I'd say is, back to what time frame is, I think people wanted to take a little zoomed out view. If we get into this big market turmoil recession that looks like it could happen later this year, I think Bitcoin could sell off. But I think the purchasing power of it could still go up, even though down in US dollar terms. And it's what happens after that's what we want to pay attention to.